Hi, good evening, traders. This is another session by FX Pesa team. With me is Sam. Sam, say hi.
Good evening, traders. It's been a minute. Nice to see everyone joining the session. Going to have a very brief and precise session today, and I'll let Robert take the lead and start.
Okay, so today we are going to look at the mean revision in forex trading. So basically, this is more of a strategy, and what we are going to learn is more on how to look at the deviations in prices so that you can determine areas of buying or even selling. So let's have a look at the definition. So this is a trading strategy where price of an asset, let's say GBP USD, will eventually revert to its long-term average or mean value. This strategy assumes that when price of an asset deviates significantly from the mean, it is likely to move back towards the mean in the future. So this is, but Sam, if you look at this conversation, this is where like you'll hear traders say that price will always come back, but where?
Yeah, so number one, most of the technical analysis concepts come from things you observe in nature. For example, if I was to say there is a mean temperature or the mean temperature of Limuru is, I don't know, 16 degrees, then even if you have a hot day, you do know at some point that temperature will come back from, say, 20 degrees back to 16 degrees. So in nature and in many other things, things tend to revert to the mean over the long run. And so is the same case with prices. So at the end of the day, you just need to establish the idea of what is the mean in the market, what mean are you using, and then from that, try and develop your strategy.
Awesome. Now, on this particular session, we'll be looking at ways of identifying those means. So let's look at basically a strategy over here that maybe we can look at. So one, what are the steps that you need to do? You need to identify the currency pair. If you're doing currencies, if you're doing stocks, if you're doing cryptocurrencies, if you're doing indices, whatever it is, whatever asset class that is that you want to trade, then you must first identify that particular asset. Now, second point, you'll have to define the mean. So here we'll use, you can use the simple moving averages, or you can use the exponential moving averages, but in our case, we'll want to use the exponential, the EMA, the 200 and the 800, so that we can have, a live example of how this plays out, so that you're able to calculate the value, the average value or the mean of GBP USD. Then now our third point is identify entry or even exit point. So this is where now you're looking at opportunities to buy or even sell. So if price drops below the 200 EMA, look for opportunities to buy at the 800 EMA. If price rises above the 800 EMA, look for opportunities to sell when it gets to the 200 EMA. Sam, what's your take on this?
Yeah, so it's very straightforward. You're simply trying to take advantage of the fact that if price deviates away from the mean, you're trying to see at what point do you start trading to the moving average, to the given moving average. And you're having two triggers, which is one, the 200 EMA and the 800 EMA, which is your target. So in the long run, it's a very simple yet reliable concept of trading reversions back to the mean. So usually you'd have people trying to trade deviations away from the mean, but this one is, I think, a more reliable approach, which is when you see price has deviated too much from the mean, then at what point do you start considering that you'd want to trade that price back to the mean? And I think if you had a visual example, it will be very clear.
Awesome. So we'll definitely have that. Now, just like Sam has said, then you really need to look at those deviations and see where you'll see the opportunities. But before you go to that, before we go to the live charts, then basically remember in every setup, we as the FX Pesa Academy, we always advocate for risk management. And basically this is where like you must know the appropriate position size that you're supposed to use, where you're supposed to set out your stop loss. Also remember the risk to reward. You must have the ideal risk to reward will be 1:3 and above, but if you're using 1:2 is also okay. And we found traders, I don't know whether Sam you've encountered this in maybe Eldoret, where guys are not able to calculate. Maybe they'll always be asking what is the ideal lot size to use when trading, let's say NASDAQ UT100. And in our case, we normally recommend that you go to the Equity Trader. Kindly download the Equity Trader app. It's quite straightforward. You're able to see some of these things literally on your phone. So what's your take, Sam?
So with regards to position sizing in the first place, it's usually a function of two things. Number one is your risk appetite. And number two is the distance between where your stop loss is and where your take profit is. Once you have those two things, which are in most cases predetermined, calculating your lot size should be very straightforward. And I think we have a number of videos on the same with regards to, given that you have a certain risk tolerance and a certain exit point, be it in losses or profits, what lot size should you use?
Yeah, pretty much. So maybe before we go to the chart, have a look at the GBP example. We can actually go through the Equity Trader app for maybe those guys who probably would want to understand how this plays out. So I'll try and use my phone, and let's see whether that will probably give us something. So let me share this. So this is my Equity Trader app. So once you tap it, then you'll see the different asset classes. In this case, we can see the commodities up here. We can see the currencies, ETFs, indices, metals, shares. So on our particular example here, we are looking at GBP USD. So once you tap that particular currency, you should be able to see this, a chart that is loading. And then down here, you should be able to see the buy sell. So let's say, for example, you're looking at opportunities to sell. Then down here, you'll see where you're supposed to use the right position size. So in this case, let's say you have, let's say $100 account. Whenever you have this $100 account, then you should always use the 0.01 lot size. And I think this is something that majority of you who've been coming to our satellite offices, they know we have classes we have classes from Monday to Thursday, and then we have practical classes every Friday, demo competitions. And one of the things we look at is basically risk management. So as you can see right here, the Equity app is able to tell you how much free margin based on your capital, the margin requirement. So in this case, 3.16. So we've encountered guys who, with FX Pesa, you can actually deposit as low as $5 right? So
yeah,
what this means is that with your $5, then you can actually take a position on GBP USD. But then again, you'll have to use a lot size of 0.01. And then there's the pip value. The pip value tells you every one pip will give you what? $0.10. Yeah. So if let's say you want to your take profit target, it's let's say 60 pips, and then your stop loss, let's say 20 pips, risk to reward, that is 1:3. So you can see the Equity Trader app is able to give you the numbers that you'll be earning. So you're able to see that once you have that, if your target is hit at 60 pips, then you'll have $6. If your stop loss is hit 20 pips, then you'll take a loss of $2. So once again, if you increase, of course, this lot size, let's say you use 0.10, then the same should change. Then where you have the margin requirement, we can clearly see that has shifted to $31. Then that means you must have $31 for you to take and maintain that position, right? And then the pip value changes. Every one pip movement will give you $1. Once again, so if we go to our numbers, take profit target has changed from $6 now to $60, and the stop loss definitely has also changed from 20. So from 2 pips to 20 pips loss. So basically, these are some of the ways that you can use the Equity Trader app. If you increase that lot size to 1 pip, to 1 lot size, then we should see the margin requirement also changing to $316. take profit target, your 60 now. If your target is hit, then you'll gain $600. And of course, if your stop loss is hit, you'll get to lose $200. So this is how we basically get to use the Equity Trader app to calculate whenever you have challenges with position sizing, risk to reward, where you set out your stop loss. We've made your work easier. I believe that's where tech comes in. We as a fintech company, as a broker. Yeah, Sam, anything else maybe I've missed?
Yeah, because traditionally, you'd either be used to the lot size. So you have trial and error until you find your right lot size for your account, which then again is either you're using a demo account or you're losing money so that you find the optimal lot size for yourself, or you'll calculate it either manually or on a position size calculator. But at least right now you have everything inbuilt, very intuitive. Yeah, your analysis at the top of the chart and your risk management parameters when you scroll low on that chart. So I think this makes it easier to solve that issue for guys not being able to know the exact or optimal lot size that they should be using.
Yeah, so definitely, guys. So always make sure that you're using that, and also you should also journal your trades. Make sure that you're already looking at whatever it is that you've garnered at the end of the day. How are your emotions? Remember, journaling is not just about.
I think you need to share your screen.
Yeah. I'm about to share that. So this is the example we were looking at, GBP USD, the discussion we had. So we can see clearly the white line over here is the 200 EMA, and then the purple line here is the 800 EMA. So what we've just discussed is, like, if price gets to this 200 EMA, right, we should look for opportunities to sell. And once price gets here, maybe you can book profit at this 800 EMA. And also now, maybe when price gets to the 800 EMA, you could take advantage of taking a buy position and maybe now exit once again, maybe towards the 200 EMA. Basically, this strategy is so straightforward, just like Sam had alluded, and it gives you an edge. And also, of course, now you have to look at other confirmations before you decide, let's say, to sell. When it gets to the 200 EMA, you have to look at the reversal candles. You have to look at maybe, can you see a reversal pattern, maybe a double top, maybe can you see a head and shoulder? So these are some of you must have some confluence, so that you're not taking a particular position based on one particular confirmation. You have a stream of confirmations here. Sam?
Yeah, because if you think about it, when you're trading and your target is through the 200 EMA, then in a way you're trading a breakout of resistance or support, because these moving averages usually act as support or resistance. So at the end of the day, this is a breakout strategy from one EMA to another EMA. That means all the rules that you use to trade breakouts need to apply in this case. But the better part is, at least in this case, you know why this breakout is happening. You're looking for a reversion or price to head towards some bigger mean that has been trending in the market. And that's where the target is. So unlike the usual breakout strategy, the target is also very dynamic. It's a moving target, which happens to be the 800 EMA or the 800 exponential moving average. So some of the confirmations can be waiting for a breakout and retest, or if you have a strong breakout, then that's when you get in. If it's a weak breakout, then you can wait for a retest. And by a breakout, mean on the white moving average, if price goes through targeting the purple one, then you should see how that breakout works, the nature of that breakout. Again, if it's a very strong candle breaking through that white moving average, then we know that there's enough momentum for it to go up to the lower moving average or up to the greater mean. If the size of the candle is not as big when breaking out, then that's when you apply a breakout and retest strategy. Other factors also come into play. For example, the minor trend in the market. As you can see in this case, today the dollar was very strong, and we generally had somewhat of a downtrend, which is a confluence to your trade.
Awesome, Sam. So I'm looking at possible questions, and there are no questions today. So those guys will be reviewing this presentation later. Kindly let us know via the comment section. Maybe if there's something that wasn't clear, then make sure that probably you visit our satellite offices. Then you should be able to gain more on this. Sam, maybe you can share something on Eldoret.
On setups?
No, your location maybe for someone who would want to visit our physical classes.
So at the moment, we've moved to a new office, still in Rupert's Mall, third floor. It has more space. We have more room to accommodate more traders, and we are still doing sessions from Monday to Thursday. Those are classes, and then Friday we have live sessions, and then during the weekends we usually have either pips and branch or just discussion traders on how the journey has been for the week, or if there's been any news within that time frame. So yeah, so you can always find us. It's a walk-in office, so you can just walk in and we will be there to sort you out.
Awesome. So everyone else who's watching this is Robert Tika. So Tika, Maisha Heights, that floor. Make sure just come in, tell a friend to tell a friend. You can also follow FX Pesa on our socials, FB, Twitter, Instagram. We'll also have TikTok, and also kindly follow our podcasts. Make sure that you're looking at the bullish banter and also financially incorrect, so that you're able to look at the conversation that traders are having over there, because really we have so much we're doing for you guys. It's all part of our financial literacy, so that we don't want you guys investing in something that you don't understand, right? Because this is I think the biggest problem we encounter among traders, guys who just go in all in without knowing what they're doing, and there's only one way out. I just take a loss.
Yeah, that's true.
Yeah, so make sure that you invest in knowledge and
also community.
Yes.
And
yes,
also community.
Awesome. Yeah, thank you, Sam, for that reminder. Yeah, the community that you are building in different areas. Let's say, like, for example, in Thika, Sam in Eldoret, we have Eastleigh, we have Kitengela, we have Nairobi HQ, Westlands. We also have Nakuru and also Kampala. So there's a whole great community out there of traders, and that's why we are here, to make sure that you guys have a great user experience when it comes to trading. Otherwise, thank you, Sam.
Thank you guys for attending the session. We have the other sessions. Make sure to attend the market snapshot sessions in the morning from 11, and evening sessions, we have another one next Monday and Wednesday. So just to get the difference, these ones are on strategies, and the morning sessions are on what to look out for during the day, especially if you're trading. So thank you guys for attending. See you next time.
Okay, bye-bye. See you next time.